please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra and I have the pleasure of Nigel D'Souza's company today. Prashant is going to be joining in later. But nonetheless, it's a strong start to the week. So we are lauding the fact that the Nifty, the Bank Nifty as well as the Sensex are at all-time highs, fresh record highs, and multiple record highs is what they've touched, at least for the Nifty and the Sensex through the year. So no surprise coming in there. But a lot of stocks in focus, and that seems to be a demanding much more attention today. So the stock really topping the charts on its debut is HDFC AMC. I mean 64% gain on that particular stock. Issue price of 1100 rupees. Titan, which is reacting to its numbers, very close to its 52-week high of around 1,000 rupees for that one as well. Laurus Labs, which has actually taken quite a bit of a U-turn and is down around 8% on the back of a margin compression. Something like Adani Power is also in focus ahead of its numbers today. So Adani Power up around 3%. Quite a lively market.
That's right, Ekta. You know, if you were talking about that HDFC AMC business, Reliance Nippon, that would have been a good play. You know, but you had to play it earlier, because if you played it today, then from today's high, just pull up the intraday chart of Reliance Nippon AMC. That's corrected nearly around 7.5% from the high point of the day. So let's get the intraday chart up there. You'll argue, well, if you compare it, the market cap to the total size, total AUM, then it's trading at around, what, 6.5% odd. HDFC AMC, after this listing, is at around 12% odd. So, you know, that valuation discount is there, but for reasons, right? So that stock is lower. But Ekta, we're talking about HDFC AMC, a lot of retail shareholders out there. They got shares worth around 14,300 rupees odd. They're making a good 8,500 rupees odd. If they sell it today, the problem is, should they sell it? You know, the same thing happen in terms of Avenue Supermarts. People who held on there, they're making 5 times those returns. And also the other one I'm looking at is IDFC. Take a look at the intraday chart. We're talking about these two stocks. IDFC is up nearly around 8.5%. Reports suggest that maybe the Avendus is looking at picking up a stake in that mutual fund. And that stock, just take a look at that, move to the high point of the day.
Yes, absolutely. I think with the HDFC, it is also the brand name which, you know, results in the premium as well as the scarcity value that you get with regards to a listing such as HDFC AMC. But nonetheless, we have a lot to wade through over the next 1 hour. Sudarshan Sukhani joins in with the technical check in the morning. Sudarshan, over to you then. What are you recommending? Index call as well as in terms of stocks?
Yeah, good morning again. Well, I have been asking traders to be long since last week and then buy on a dip. Today morning, luckily we had an intraday dip in the Nifty and the Nifty Bank. So at current levels, both indices are buying opportunities. Because we've rallied a lot in the last 1.5 days, there should be a stop for the Nifty, and that stop is 13,140. So that's the cash index. So with this stop, I would recommend go long in the Nifty and also follow up in the Nifty Bank, both. The markets are trending up, and all we have today is to go and buy mid caps and large caps and whatever. So since we are already covering the large caps in the indices, I have 3 buy ideas for mid caps. The first is Adani Ports, where a small consolidation is leading to a breakout on the upside. Go and buy that. The second is Yes Bank. Yes Bank, after a deep correction, is now rallying and may well outperform the other private banks. And that's saying a lot, because private banks are doing well anyway. So consider buying Yes Bank. And finally, from the FMCG pack, buy Marico. Ekta, you know, I have this theme consistently, stay with good quality stocks and you are rewarded. So I have good quality stocks for the viewers.
Okay, all right. Stick with good quality stocks. That's advice that's coming in there from Sudarshan. Sudarshan, but we have, you know, someone who's written to us, a Twitter query actually, and they're asking that in fact they have 100 shares of Delta Corp at around 175 rupees. Should he sell or hold on to the stock? Are you a gambling man?
I think we are all, that's a good question. We are all some kind of gamblers. That's why we are in the market. So, but apart from that, because Delta Corp is now coming out of a large base, it's already corrected. There does seem that a short-term rally which has started should continue. I would suggest have a modest target of 290 around, and then exit once you reach this target. But it's there. Stay with it now.
Okay, all right, Sudarshan, we're going to let you go on that note. Thanks very much for joining in, taking us through those strategies. We have Rahul Shah joining in to tell us more about the F&O space then. Rahul, over to you. What are your recommendations, stocks as well as index?
Yeah, hi, good morning. I think what we've been seeing since last few sessions, one way the heavyweights performing and participation by the mid caps as well as in last 2-3 sessions, and the rally is participated now into full-fledged all around rather than focused on 4 or 5 heavyweights. So from there, I think 2-3 stocks what we like is one is ICICI Bank, which has given a fresh breakout. And the longs built up also in last 2 sessions we've seen in ICICI Bank post results. So I would buy ICICI Bank with a stop loss of 308 and target of 335. Second being Tata Steel metal packs, we have seen a mixed bag, but in last 2-3 sessions we've seen a renewed interest in metals. So in that space I think Tata Steel looks good, so I would buy Tata Steel with a stop loss of 555 and target of 585. And third being Reliance, I think we have seen this stock been rising consistently since last few sessions, and I think this rally would continue going forward as well. And it's come into a new range as well as in futures also. I see that the stock can still rally to 1230 or so. So I would buy with a stop loss of 1155 and target of 1230.
Okay. All right, Rahul, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So those are some F&O strategies. But let's talk about one stock. Glenmark earlier in the morning had announced that they have signed an agreement for Greater China with company Harbour Biomed. This is for the development of their new biological entity GBR1302. And that's basically being studied for cancer. We have Glenn Saldana, the chairman and the MD of the company, joining in on the phone line to discuss this particular agreement a little more in depth. Glenn, hi, thanks very much for joining in. If you could just take us through the key details of this particular agreement. Is it just limited to Greater China, and what does it entail in terms of financials?
So, structured is basically, we are partnering with Harbour Biomed for China, Taiwan, and the Greater China region on a very novel monoclonal antibody, GBR1302, right, which is being studied for breast cancer and gastric cancer. I think what makes this unique is, it's a pretty sizable deal, $120 million for the Greater China region, and we still have all the rest of the world rights with us.
Okay.
This just validates the innovation that we're doing, right, in oncology.
Mm-hmm. Okay, and Mrs. Saldana, so you said that there's a possibility of you extending to other parts of the world. By when will this happen?
So I think we have the option to license GBR1302 to various other partners globally, or to do a separate licensing deal with a big pharma as we go forward.
Will you be doing this?
Right now, we continue doing the clinical development, and the fact that Harbour Biomed has gone through our data and has liked what they see in terms of efficacy, right, is validation that the product actually works. And now we are furthering our clinical development, and we will decide on bringing on board a partner as we go forward.
Okay.
In the rest of the world.
Glenn, exactly that. What phase is GBR1302 in?
So it's towards the end of phase 1, but keep in mind phase 1 in oncology is in patients. So you're dosing patients who are terminal and have gone through various other lines of treatment, and then they come onto your drug. So it's phase 1 in patients basically.
Okay. You have spoken extensively about one kind of out-licensing deal in your past conference calls. Is this it that you were referring to?
Well, we have several discussions, Ekta, on various licensing deals across our portfolio, so I'm not sure what exactly you're referring to. But I think, with the amount of progress that China is making and the opportunity in the Chinese market today, particularly on the innovative side, this is exciting. It also gives us access to a lot of data on Chinese patients, which we can use for our global regulatory filing. And we get a completely different patient pool of data.
Okay. Just a few more details. Would you probably look to extend this agreement with Harbour to other countries as well, or are you in talks with other companies for the same?
Well, Harbour is a Chinese company. I mean, they've restricted themselves to China and Greater China. So we have discussions with various other companies to look at further out licensing of 1302 for the rest of the world.
Okay, you have a couple of others in your portfolio, something like a GBR 830. Can you give us a sense in terms of which one do you think would probably be the most promising molecule for an out-licensing deal, maybe in the next couple of months?
I think, Ekta, we don't guide to specific licensing deals, but I can tell you, I mean, across our innovative portfolio, whether it's GBR 830 or GBR 1342 and 27864. I mean, they're all exciting, and we continue to get a lot of data which makes them attractive from a licensing perspective.
Okay. Just one quick question, Glenn, about your biosimilar pipeline. I think you have one biosimilar which is under study right now?
That's correct. So we have a Xolair biosimilar where we've just completed a positive phase 1 trial. So we've got good phase 1 data, and we're now going to the FDA to initiate phase 3 trials. Post FDA approval.
Mr. Saldana, before we let you go, sir, there were a couple of articles that suggested that there are 3 Ps that are looking at Glenmark's API business. Any truth in that, or do you want to deny it totally?
I can't comment on anything other than this specific transaction.
Okay, fair enough, Glenn. We'll leave it on that note. In fact, the numbers for Glenmark are coming out this week, but we have other numbers to reckon with. We have Britannia's net profit, which is coming at around 258 odd crores, which is lower than our expectation of around 266 crores. So we'll wait by for more details. This compares to around 216 crores that they did same time last year. In terms of the revenue figure, we're expecting around a 14% growth. So 2,544 is where it's coming at. And that's not bad. That's in line with our expectations of around 2,580 crores. So that would be around a 10% plus uptake that you're seeing on the top line. So maybe there could be a little bit of a margin disappointment, and that's where it is. 389.4 crores versus expectations of 402 crores. So that probably trickled down a little bit onto the profit figure. Not huge in terms of a disappointment, but still it's missed estimates on maybe a little bit
on the
in terms of the operations.
Yeah, I think we'll have to keep an eye out on that one because the stock has moved lower. We'll have to see whether or not there is some buying interest lower. Remember, in terms of a valuation, the stock trades at around 50-52 times its forward multiple. So just keep that in mind as well. Currently, in fact, the stock has arrested that fall at around 1.5%. Top line more or less in line. The margins, that's a bit of a miss. Operating profit as well, a bit of a miss. Small miss, maybe around 2.5% to around 3% is the miss in terms of the operating profit.
Okay, so that's on Britannia. That stock is actually reacting to that little bit of a disappointment which has come in on the operating margin.
I think for HDFC AMC, it's listed at a 60% premium. Everyone was talking about 45 to 50%, 60% right away. And now, in fact, it's even higher than that. Abhishek is with us to run us through his analysis and all those details. Abhishek.
Well, Nigel, to begin with, this is the strongest listing that we have seen in 2018. From an IPO, it is the 5th company from the HDFC group to come out with its listing. So by market cap, they are the 16th largest BFSI unit. And amongst NBFCs, it is the 8th largest company in terms of market cap. You look at the IPO pricing. The IPO was priced at 7.6% of their AUM. So their listing at 1,726 was valuing the company close to 11.9% of AUM, while the highest point, that is 1,835, valued the company close to 12.6%, and currently at 1,811, it is 12% plus in terms of the valuation of market cap as a percentage of AUM. So quarterly average AUM, the HDFC AMC is the second largest, company in amongst the MF players. The strength is excellent distribution channel. The persistency ratios are higher. They are the most profitable AMC, and market leader in balanced fund with a market share of 35%. Their weakness is that they are losing market share. Market share loss is due to underperforming schemes, moderate PAT growth. Their PAT growth is not in line with the strong AUM growth, and core earnings are lower due to higher share of treasury as a percentage of their overall portfolio. Back to you.
Okay, all right, Abhishek, thanks very much for that. It is what, the 5th company from the HDFC stable to list. The others include Standard Life, HDFC Bank, HDFC Group Finance, so all of those. But nonetheless, some incremental news on Britannia. Double-digit volume growth is what they've said. So just keep that in mind because the stock has recovered from the day's low. Manisha joins in now to tell us about what she's tracking in the commodity and currency space. Manisha, over to you.
Thank you so much for that. Well, there's plenty happening in the global markets, and that's what we are keeping an eye on as well. To begin with, the crude oil prices will want to watch out on what the US's stance is on Iran sanctions. Remember, the US has said that the Iran sanctions will be restored in 2 stages. So one, of course, is today, and crude oil features in the 2nd stage that begins on November 4th. But today as well, on what the tone is, how much the US would really want to impose back. And ahead of that, you have seen the crude oil prices actually attract some premium. Crude also has seen some strength after we have seen data that the Saudi Arabia output has declined for the month of July. The US rig count has dipped as well. And then market in some sense would also be keeping an eye on the US-China rhetoric, where China in the weekend has said that duties ranging from 5 to 25% will be put on goods, identified in sense of 5,207, where the US where the China would implement taxes on the US goods. So whether it's the trade concerns or whether this really is about on the Iran sanctions, both of those important global cues is something that we are looking at on table today. Joining us more to talk about that is Virendra Chauhan, oil analyst at Energy Aspects. Virendra, hi, good to have you. What is your sense, first of all, on the US-Iran sanctions? Because that really seems to be like a done deal now. We are going to hear more about that today. Would you see more premium then coming back to crude?
Yeah, I think there are kind of 2 things you've rightly highlighted that are driving the push and pull factors on the oil price right now. One is Iran sanctions and the other is demand. And I think the driver right at the moment is concerns around demand because of the kind of this trade war which is playing out between China and the US. And you've got to remember that if it does play out, then it's not just China and the US economies that will be affected. It will affect the global economy. So that seems to be the driver, but we do think it's a little bit overblown right now, and we do not see weak demand numbers coming in anytime soon.
So what would you say that the near-term bottom perhaps for the crude oil is made? Because we did see quite a bit of a reaction in last 2 or 3 weeks. We've started on a positive note today, especially with the US-Iran things back. Do you think there could be some more strength now coming here?
Yeah, I mean, I don't think we're going to move out of this $70 to $80 range anytime soon. But come the 4th quarter of this year, you're going to have 2 kind of supportive factors which could lead to a sharp acceleration in the oil price. The first one being the sanctions fully kicking in Iran, and the second one is a pickup in global oil demand as refineries return from maintenance. So we'd expect spot demand for crude to pick up, and we'd expect supplies from Iran to come down. So those 2 factors could mean that we snap up out of this $70 to $80 barrel trading range come the end of the year.
Virendra, also coming on the global supply cues right now, because Russia, Saudi Arabia, US account for 1/3 of the global production, and we have seen production more or less continue on the higher side. What do you think could change here if it would, and that could really impact the prices?
I think the market has already factored in a slower pace of growth from the US. The kind of well-documented pipeline constraints in the US has meant that growth in the Permian, which is a key kind of growth center for US crude and actual global crude, is likely to slow down because the pipelines are full. With regards to Saudi Arabia, as you rightly noted, production has come off. And that's because there's a lot of refineries going into maintenance in their fall period. Once those refineries emerge, we'd expect Saudi production to tick back higher. With regards to Russia, we suspect it's going to be stable around the 11.2 million barrels per day that it produced in July. So we don't expect a lot of growth incrementally from Russia.
Well, nothing much to incrementally, talk about with regards to the markets, except for the fact that the Nifty is at 11,400 as we speak. So it's inching above that level. And some more news on Britannia, where they are going to consider a stock split on the 23rd of August.
That explains why, and there was a bit of a rumor a couple of days ago as well that this is likely to come about. The stock has doubled, tripled in the last few years. That explains why, in fact, even after a bit of a margin miss, the stock was not, falling. And that's the news out. I think we should pull up maybe a Bombay Burma as well. That as well moves in tandem. So Britannia has recovered nearly around 2.5% from the low point of the day. And also you pull up BBTC or Bombay Burma as well. That stock as well normally plays catch up. That was running a few days ago as well. And that one as well, as we speak, from the lows of the day, it's cut some of its losses, nearly around 1% of the low point of the day. Big move coming in on Britannia as well. As we speak in the last
and
minutes.
in fact, it's reversed its losses. It was down around 1.5% post that little bit of a margin and profit disappointment. So now you can see that interest coming back post the news of, say, the volume growth, which is in double digits, as well as the stock split news, which is just about hitting the exchanges. Larsen & Toubro also in on account of, order wins. So that is, I think, to the tune of over 1,200 odd crores. But we have another stock or company to reckon with. ENI reported its numbers, its first quarter numbers. Revenue was up around 16 odd %. Margin surprised quite handsomely, 25% versus 18.3%. We have Prashant Pandey, the MD and CEO of ENIL, joining in on the show to discuss the company's performance. Prashant, hi, thanks very much for joining in. If you can start by just telling us how exactly the quarter went by in terms of advertising growth, which led to this uptick of 16%.
Remember, we're coming from a low base last year, right? Everybody, the whole media sector was badly hammered by the pre-GST period and all of that demonetization and the RERA and all of those kind of things. So obviously, all media companies are coming from a low base, so the numbers will look very high. So our operational revenue has grown by 20%. Our declared revenues have grown by 16.5%.
So how much was organic growth? I mean, if you just remove it from the...
Well, even at a same station basis, if you look at our radio business, that's up by 19%, right? So it's been a strong quarter in that sense, but I wouldn't call it a really strong performance. I would call it a strong performance with a caveat that you should compare it with 2 years back, and compared to 2 years back, which was the last normal year, the business of the company is up by about 10%. So it's recovered, but it is nothing, that we can say that the markets are fully recovered. It will take some more time.
Well, so split that up for us, the legacy revenue growth, as well as, if you could tell us your new stations, how have they done? And then give us some guidance. If you're not so happy, you're sounding quite modest as well, maybe this isn't such a good quarter, then for the remainder of this year, what can you guide us on?
Well, let me just repeat that. It's a good quarter, but I'm just adding a dose of caution because I don't want people to jump and say 20% means wow, but 20% comes on a low base. I think it's always good to keep the investors.
Shareholders will like that, actually. But,
and we always believe in keeping our investors very informed.
Absolutely.
So in terms of breakups, the new stations have done remarkably well. They've grown by 70%, but again, I must caution that that's on a low base.
Low base, perfect.
Important story is that they've turned profitable. They turned profitable a couple of quarters back, so that continues. Okay. But there is still some pullback in or pull down of profits because of the batch 2 stations, which haven't gone operational yet, but where costs have got incurred, right? So there's about ₹1 crore of loss on account of the batch 2 stations. And that is why you will notice that our PAT margins and all, while they've improved by 100% compared to last year, they're actually lower than 2 years back. My PAT number is lower than 2 years back, primarily because we're still in investment mode, and I think that will continue for another year. To your question on what I expect in the rest of the year, I think there is going to be a recovery. There is no doubt about that. Every sector is looking up, and I think the government spend will increase significantly. There's also political spends that should come towards the latter part, end of the year, and I think therefore the rest of the year should be a good part of the year.
Okay. But your margins have improved. I mean, 25% is what you've done this quarter in terms of margins.
Yes, Ekta, there is no surprise over here because remember the radio business is a high operating leverage business. So whenever the revenues go up, the margins go up immediately in the same proportion.
So what's sustainable according to you?
Well, we have always said that the sustainable margin for the company is in the mid-30s. And typically the second half of the year, because the revenues tend to be much higher, the costs tend to be fixed. So the margins really improve in the second half of the year. But there is a second important factor, and I've been saying that for the last 12 months, and that is that our focus on the margins of the non-radio business, right? And this quarter, if you notice, we have improved the activation and concert business, really the toughest part of the non-radio business, by about 4 percentage points. So from 24%, we've gone to 28% margins as a very conscious effort at improving the margin. So those are the factors which have...
But if margins are sustainable above 30%, you're expecting this improvement to come in the second half of FY19. So you're expecting it to improve from this 25 to say up to 30+%?
Yes. Yes, because, and this happens every year. That's a seasonality in the media business and specifically in the radio business.
What about the volumes? I didn't get that number. I think last year you did around 15% approximately.
No, last year we were down 15% in volumes,
15%.
if you remember, because we had taken a conscious call to cut the volumes which are coming at lower pricing.
Correct.
Right? This year our volumes have gone back up by about the same number,
right.
But we have managed to keep the pricing at the same level as last year. So if you notice the pricing that we have declared, it is down by 3%, but that's not because of pricing going down. That's because of the mix of the clients.
Yeah.
So typically e-commerce has spent a lot more, and e-commerce clients tend to spend, have a slightly lower pricing. E-commerce has also gone into a lot of small towns, and therefore the pricing which we do on a sum of parts basis tends to come down. Also, state government contribution is higher compared to central government. So many factors, more afternoon, less prime time, and all the many factors which result in that. But the pricing has been held basically at last year's level, and the volumes have grown significantly.
Okay. Just wanted to ask you, what were your losses in your new stations which you have incurred this time, and your profits in your legacy stations?
Like I mentioned to you, the batch 1 stations have been profitable for the last 2 quarters. If I remember right, about 1 crore is the profit we made this year in our batch 1 stations. But batch 2 stations which haven't gone operational yet, but where costs have been incurred, I think they've reported a 1 crore EBITDA loss at this stage, because they haven't gone operational.
Okay, you were telling us about your revenue mix. How much of it comes in from real estate? How much of it comes in from FMCG? And these batch 2 stations that you're talking about, when do they go live?
Well, FMCG is our second biggest category. I guess it would be about 6 or 7% of the total revenues. About 7.5 crores is what we would have done from FMCG. The number 1 is government, right? You asked about real estate. Real estate is certainly in the top 6 or 7. Real estate has seen a good bounce back, approximately 30% revenue growth in real estate. It's coming again off lows induced by RERA last year, so therefore it's to be kept in mind. You asked about the new stations which are
the batch 2 stations that you're talking about. You have incurred a crore and a half.
Yes.
When do they go live?
Batch 2 stations, about 5 of them have gone live in the last 3 weeks. The rest will be done by the end of the second quarter. That's another 16 more. We have 21 in batch 2.
All right, Prashant, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's the view coming in from ENIL. We need to talk about the technicals of the market now. We have Ashwini Gujral, as always, joining in to discuss this. Ashwini, hi, over to you then. What are you recommending in terms of the kind of momentum that we're seeing for the markets, as well as the incremental uptick that we're seeing for the Bank Nifty?
See, there's a very distinct movement towards corporate banks, and Axis Bank is now participating with equal amount of gusto. Also, Reliance is making highs of the day. So this sort of leadership is keeping the market higher. Today, I'm also interested in watching what HDFC Bank does. It went down for about 4 to 5 sessions. Today is showing some amount of green. So that way, there are strong stocks which are moving up. Basically, State Bank, ICICI Bank, Axis Bank, Yes Bank, if everything moves up, it's unlikely that the market can give back a whole lot. I think still a decent place to buy into the market. It's consolidated post the morning's gains. So that way, Bank Nifty still can be bought. Having said that, I think now we can even look at something like PNB, which is a buy with a stop of 88, target of 96. HDFC Bank is a buy with a stop of 2100, target of 2220. And Axis Bank is having another good day. That's a buy with a stop of 580, target of 605.
Okay, all right, Ashwini. Well, I think we have a couple of Twitter queries as well that are coming in there. Ayush has around 11,600 shares of GAEL at around 260 rupees. He wants to know the way forward on the stock. I just want to get that stock actually up for our viewers, whether or not he's referring to GAIL or is there another listed stock? Okay, I think we'll just try to clarify on that front. I think it's GAIL actually maybe that he's talking about.
In any case,
it's GAIL. Let's talk about GAIL because he's lucky he's got it at around 260 odd and making some money. Ashwini, what's the view on GAIL?
I think it is GAEL, Gujarat Ambuja Exports Limited.
Oh, possible. All right, we'll just get some clarification. But
okay, sure. But Ashwini, what would you recommend on both of them if you had if you had an option?
See, Gujarat Ambuja Cement is much better than this Gujarat Ambuja Export, etc.
Yeah.
Where it doesn't have too much volume.
and he's losing money on that. So if I were him, I would move to Gujarat Ambuja Export. GAIL, on the other hand, the gas company, gas stocks have been moving up. So even there, he could probably move into an IGL, which is a better stock than GAIL. But I think this one is Gujarat Ambuja Export.